Daniel, it's David. You know, I want to go back to gross margins or talk about them for a moment. Your analyst day, I think it was back in 2017, and I know a number of investors have been with you for a long period of time. You pointed to, targets, and they were years out, of 30% plus margins. You're still around 26, and I just wonder, is that day ever going to come that you're going to be able to deliver on those long-term targets you talked about back in 2017?
Yeah, absolutely. So the investor day was actually in 2018, but I think it's important to point out that back then we were a music company. And when I look at this, we've really expanded the opportunity also on the top line for the company. So we're now talking publicly about getting to over 50 million creators of this company and over 1 billion user opportunity. And I feel more confident than ever with our audio first strategy that we will get there. And when you look at that business long term, that business will be substantially bigger than the one that we were talking about in 2018. And that's what we're investing against. And that means that sometimes gross margins may be quarter to quarter impacted by that growth. But I think it's important to say also that in 2021, the growth targets that we set out on the promise of investing in content in podcasts, we have far exceeded those estimates and that guidance that we gave out. And I think that was evident as well in our Q4.
I want to go back to this Rogan situation for a minute, because cultivation of content creators is so key to the long-term growth of Spotify, which I know you've been talking about quite a bit. But aren't you concerned that you run the risk of actually alienating talent that is crucial to those long-term goals of more than doubling monthly active users and growing those gross margins? And I don't just mean musicians that maybe haven't, at least until recently, brought in that much of the revenue. I mean those very valuable podcasters like a Rogan as well.
Yeah, absolutely. Overall, I think the big balancing act that we're trying to do as a company that's just critical is balancing creative expression with, of course, the one about the safety of our users. And that's also why we published this weekend our policies and really for the first time did that. And that's probably on our half something we should have done earlier, and that's on me. But we have them out there now so that everyone can look at these policies and understand what goes on our platform. And our goal, obviously, is to have as much content as we can. And we're going to try to do everything that we can to build the best possible experience for creators where they can interact and engage with their fans and monetize those relationships.
Daniel, you understand that I think there are many people who are trying to figure out whether you are a pandemic stock, so to speak, Peloton being the worst example, but a lot of companies where people were cooped up, they were listening, they were looking for something to do, they moved to a house, and as they did work, they took Spotify, and now that group of people is no longer growing. When you look at how many users you have or are getting, you understand that people are very concerned that the first quarter represents an opening quarter in the worldwide economy, and that what you might be thinking is that Spotify won't do as well, and it's not just business as usual. How do you address that concern?
No, I totally understand that, Jim. But what I would say is actually, it is true we were impacted by the pandemic. And you saw that in our last year in Q1 and Q2. But if you look at the back half of that year, the Q3 and Q4 numbers, those were really just outstanding numbers. And Q4 specifically, we had our record. It's the biggest quarter in history when it comes to growing our overall number of users. So I think that really bodes well for 2022, and all the top line metrics that we're seeing makes me just be very confident in our overall growth trajectory. And I just want to go back and say that, I said this in the opening, but Q1 just frankly matters a lot less than the other 3 quarters for us. So that's how you should look at this.
Daniel, I do want to get your response to the White House's press secretary's comments yesterday about everything that is going around the debates about misinformation and how Spotify is handling it.
Yeah, well, again, what I would say is that when you look at what the scientific community have asked us to do, it was really around 3 things. And all of those 3 things we delivered this weekend. So if you think about it, the step 1 is obviously publishing our policies. What is it that you're actually taking action on? And the second thing is the COVID advisory tags. So all content now on Spotify, it has and will have in the coming days a COVID advisory tag that talks about how we can push that to a COVID hub, where there will be a lot more information from experts and health authorities next to all content, no matter who you are, that talks about COVID-19. And that's really what the scientific community was asking about as well. So I feel good about that. But obviously, I think it's important to point out that as platform goes, this is an evolving safety landscape. And obviously, we're going to evolve with that too. And that's a dialogue that we're constantly having with authorities, with experts, with the medical community, as well, of course, with the legal community. So this is an important topic, but I don't think it's unique to Spotify. I think it's true for all platforms. And obviously, we take our role here very seriously.
Daniel, David, again, to sort of end this off, talking about margins again, obviously something that would get them up is raising price. You've done it in certain markets at certain times, but I do wonder, would you consider raising price again, or how should we think about, where pricing is right now? The likes of Netflix, for example, been pretty aggressive lately in raising price.
Yeah, David, I mean, the way we look at this is we provide an excellent value for all of our customers across the world. So over time, we definitely think that there's a lot of opportunity to raise prices. But we're going to carefully look at the market, and when it makes sense. There's obviously a lot of things that's happening in the economy right now. And I think you can see that not just on Spotify, but really across the whole kind of streaming industry. If you look at the video business, for instance, I think you can see that there's definitely been a reaction to those type of price increases. So it's something that we're thinking about. And I definitely think that there's room for us to raise prices, but we're going to be very careful about doing it so that it really goes against our long-term growth objectives. And that's the key. We don't try to manage this business quarter by quarter. We're trying to manage it across really the multi-year opportunity that we see. And we're still very early in that opportunity. This is going to be a gigantic business. We're talking 50 million creators and over 1 billion users. There are very few of those platforms on the internet, and that's what we're investing behind.